Good morning and welcome to Good Returns. My name is Shruti Sarkar, and we are very privileged to welcome Mr. Sharat Chandra Shukla from Mehta Equities on the show today. A warm welcome to you, Mr. Sharat. We have our interim budget tomorrow, a big day for us. Everybody is talking about what is to be expected. This is anyways a vote on account budget. We expect the full budget to come only after the Lok Sabha elections. What are your overall thoughts? What are your expectations from the budget tomorrow?
As far as this budget is concerned, as you rightly said, it's a vote of account. And so one should not expect any big bang announcements. More or less, this is going to be a populist budget because it's before the election. But I think fiscal prudence is something which the government will take into account, because finally they have to reach towards that target of 4.5% fiscal deficit to GDP ratio.
Now let's talk about the stock market a little. There's a lot of volatility. However, Indian stock market has been, touching record highs every now and then this year. There are a lot of upside risks. However, if you see globally, there are many downside risks too. There's this Ukraine-Russia war. There's Israel-Palestinian war. Inflation is high in most developed countries, and central banks are struggling to tame inflation by raising interest rates. So the Fed they have kept interest rates higher for a very long time after saying that, this will be transitory. So according to you, what could be the downside risks to the stock market this year, Indian stock market?
Well, as far as downside risk to Indian markets are concerned, I think the biggest risk is the outflow of FII money, which is happening in the last few months. But it's not so much that the market will come down, because domestic investors are putting good amount of money, and which in turn through mutual fund route is coming into the market. So, in case the FII start, withdrawing at a faster pace, then there's obviously a downside risk. But I don't see that happening, because I think recently IMF has revised the growth forecast for India. And I think even the economic survey said that we will grow at about 7%. So when the global economy is growing at about 3%, and if Indian economy is growing at 7%, I think FIs, will not withdraw significantly from India. So I don't think there are very many, great kind of big time risk as far as Indian markets are concerned. But in case the geopolitical situation worsens, like you had the Ukraine-Russia war, then you had the Israel-Gaza war, and now there have been talk, or some statements from US that, the whatever happened in Jordan, they will avenge, and there have been talks about China, about Taiwan, and so on and so forth. So there are several disturbances across the globe, but I hope this does not blow out into a full-fledged war, and it is limited to the two regions which we are currently seeing. So if that happens, in terms of bigger escalation of war, then obviously the market will take some level of correction. But I don't think the market correction is going to be more than 10%.
Okay. Many analysts are actually expecting Sensex to touch 1 lakh this year at some point. What is your expectation?
I don't think so that market can touch 1 lakh this year. If market has to touch 1 lakh this year, then you are basically saying that, we are going to have a 33% growth as far as the markets are concerned. Last year, the growth was about 20% in the market. And this year, most of the, analysts or most of the people who track the market are expecting low single digit to, high single digit to a low double digit kind of a increase in the market. So probably something like 8 to 12% will be the rate of return in the market this year.
Sure.
So expecting 1 lakh, expecting 1 lakh before the end of this year seems to be unlikely.
Okay, okay, understood, noted. Going back to budget, Sharad, which sectors do you think will be probably boosted by the interim budget?
Well, the sectors which are in focus and which should get greater level of allocation is one, infrastructure, I think railways, defense. These three sectors have been doing quite well. And I think the government will obviously like to focus on these sectors so that the growth is maintained. And infrastructure obviously requires greater level of investment, because in case India wants to be a exporting hub to the world, and that's what the government has said, make in India and make for the world in India. Now, for that, you have to be extremely competitive vis-a-vis the other players which are in the market, like China or Taiwan or South Korea or Indonesia or Bangladesh for that matter. So the biggest problem in India is the logistic cost. The logistic cost is 1.5 times higher in India compared to the other competing nations, because the port investments are to be done, the railway freight corridor has to improve, the road conditions have to improve. Only then you can do just in time exports orders. So till the time that does not happen, which is a long drawn process, and big investments are required in infrastructure. So that obviously is one area where the government will focus on.
That's an interesting insight. Thank you, Sharad. I think those were some very, very valuable, inputs from your side. Um, I want to thank you for joining our show. And that was Sharad Chandra Shukla from Mehta
Thank
Equities.
you very
And
much. Namaskar.
thank you.